Silver is on fire, surpassing most of my expectations so far this year. And what I just learned makes me think that there's going to be something big around the corner in the silver market. Let's talk about it as we explore. Big news of the day is the surge above $37 an ounce for silver. But really more importantly than silver's climb is what it's doing compared to gold. More on that in a moment. For all of your precious metal stacking needs, you might want to check out Summit Metals and bookmark their website. You will often find they will have specials there, but also more features and services on their website, as well as great customer service. So check them out at summitmetals.com. So we did see silver piercing through the $37 level for a fresh 13-year high today as market sentiment shifted towards risk-off assets amid rising tensions in the Middle East. In fact, what's going on here? We can look at the markets, and silver did climb up as high as $37.31, but has since pulled back some of its gains, still trading above 2%. And I like to look for day-to-day movement. Anything above 2% is a surge. Anything below 2% is a plunge for any given day, because that's a big move for precious metals in one day. So silver is up to $37.15 now, up 79 cents. Gold has been trading just a little bit below and above the stable point. It is now up only 54 cents right now to $3,385. So essentially no change. That has narrowed the gold to silver ratio dramatically now to 91.31. Who knows? We may see it narrow to below 90, still way high. But given sentiment and given what's going on out there, there very well could be a new dynamic and a new shift that I'm going to be talking about here that could certainly change things, and that could be a big event with the silver market. Now, we did see it go to this highest since early 2012, and this is $37, over $37, the highest since 2012. Silver futures saw a similar rise, and silver's breakout follows speculation that the U.S. is preparing for a more direct intervention in the Israel-Iran conflict, adding further uncertainty to global markets. During times of crisis, investors tend to seek safe haven in precious metals like gold and silver. However, despite this narrative, gold saw minimal movement, according to mining.com, with spot prices hovering just below $33.90 at the time of the writing of that article. It is now $33.85. And this further stretches a divergence in gold and silver seen in the past week, with the gold to silver price ratio now hovering near a 3-month low. Again, still very, very high. But this is where it gets interesting. Adrian Ash is reporting on this from Bullion Vault that this price jump of silver to over $37 an ounce and gold essentially not doing anything today in and of itself means that silver leapt, but the price of gold struggling extends this stretch to diverging prices to the longest in the 21st century so far, as the more industrially useful precious metal broke 13-year highs above $37 per ounce. Jumping by 2% today, silver has now gone in the opposite direction to the dollar price of gold for 5 sessions in a row. The first such run since April of 2019, and only the 6th 5-day run since the turn of the millennium, so back in 1999. Historic data show silver and gold prices going in the same direction on a 78.9% of all trading days over the past half century. Great research by Adrian Ash on this, and 75.7% of the time over the last 12 months. Gold and silver last diverged for 6 days running in December of 1999. Before that, the previous 6 sessions run came in March of 1973. Now, that could be a sign that we could see people focusing more on silver than gold. And as we see, gold has hit its pretty much all-time high, and hovering near that even now, just a couple $100 away from it. And so they're focusing on silver because of the high gold to silver ratio. Now, given what we've seen in the past and the patterns of the past, 1999 silver's price diverging away from gold still does not mean that we're going to see essentially silver catch up to gold and narrow the ratio to where it did during its all-time high of 33 to 1 in 2011 and about 16 to 1 in 1980. But even if we cut that in half, it is a new big deal, and it could be a dramatic shift that we could be seeing in the silver market. And I do think that even a half may be a very big stretch, you might say, but even if we did a quarter of that, it would be a big move for silver, and we could see silver very much this year continue to trade upwards north of maybe even $40 an ounce. Now, I'm not saying silver's going to get to $40 an ounce. I haven't made my video yet of my revised prediction for the price of silver, since it has already reached my original prediction of $36 an ounce by the end of the year. But there is still, now I'm even more bullish on the metal. Despite gold's ratio to silver and platinum moving in favor, says analyst from Swiss Bank and London Bullion Clearers, UBS, it's hard to know for sure whether market participants are doing the ratio trades. And I would probably guess they're not. They're just seeing an opportunity with silver because of the ratio. And all these other markets are kind of tapped out. Silver, though, and platinum as well, by extension, are markets that I think are largely untapped comparatively. So gold's pause bodes well for the next leg higher, according to UBS, because bullish gold sentiment is unchanged. And I think gold very well could continue to climb, especially with events in the Middle East occur with Iran and Israel. And Iran gets desperate because right now they are definitely on their heels. And I think very well possibly they may make a desperate move in the Straits of Hormuz, as I mentioned. And then it's no limits on what gold could do, I think, in the short term. So that is quite a possibility, for sure. And so gold is on track to target April's all-time high at $3,500 again, according to Nikki Shields at Swiss Bullion Refining and Finance Group, MKS PAMP, because the outbreak of direct Israel-Iran conflict gives a new catalyst with a nuclear World War III risk. Now, I don't think we're quite there yet. I think the only thing is there might be limited participation of the United States, much like there was when Trump took out Soleimani. Many people thought that could lead to a wider conflict or even World War III. It didn't. So even if we do send a B-2 bomber in there with a couple bunker busters at Fordo nuclear plant, where they're enriching uranium at a deep level, I'm talking about a half mile down on the ground, it's just taking out what was left over from what Israel had done, because we have the munitions to do so. And that does not mean that Trump wants to go to war. It just means they're finishing the job. And there's nothing about regime change or anything on the calculus. Trump has been absolutely 100% consistent on his views and actions with regards to Iran. It is probably one of the most consistent things that he has had done since he announced running for president in 2015. But nonetheless, some people are blowing it up way out of proportion there. But we see industrial metals especially overbought. Ones like platinum should be pressure tested as traditional havens, like bonds, US dollar, and gold, take preference over industrial cycles. And like the place of industrial use silver, however, base metals, copper, and aluminum rose for a second session running on Tuesday, while global stock markets also rose despite worsening wars and death tolls in Iran, Israel, Gaza, and Ukraine. We've also seen stepped up bombing in Kyiv as well as Ukraine. So there's still a lot of geopolitical problems out there. Daily's price moves of the past month in U.S. dollar terms have shown the same strong positive correlation with copper prices as they have shown with gold. essentially giving this R squared of 51.8. And Brent crude, meantime, spiked Tuesday above $78 a barrel, its highest since late January, and more than 30% above April and May's 4-year lows, following a threat from Tehran to close the Straits of Hormuz, which is exactly what I talked about in a video before anyone was talking about this. I posted a video about that on Monday. And hope you will check that out. I'll link to it at the end screen because not as many people saw it. But it's very important because it's still a real possibility. And while gold trading $10 below the $3,400 mark, and platinum still above $1,260, a new 4-year high when hit this time last week. So we'll see. We'll see how it plays out. But we could see this trend continue with silver. And it's because, compared to gold and even other asset classes, silver has a lot of room to move up. And people very well may take advantage, traders very well may take advantage of it. Investors, actual investors, silver stackers, I think your best time to do it, to buy, would have been below $30 an ounce. But hey, still never too late to get in with silver in my view. So there you have it. Let me know what your thoughts are on the silver market and where you think it's going. And if you think this is going to lead to something big, I think it possibly could be, especially considering the patterns that we've seen in the past and how quickly silver has moved from where it was to where it is now. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.